the United States owes over $36 trillion. To put that in perspective, that's more than the combined economies of China, Japan, Germany, the United Kingdom, and India, 5 of the largest economies in the world. But who actually owns this massive debt? Is it foreign powers like China? Wealthy investors? Or even you? And here's the bigger question: could this debt be the tipping point that shifts global power away from the US and toward rising alliances like BRICS? Let's break it all down. Stick with us, and by the end of this video, you'll know exactly who holds America's debt, why it keeps growing, and how nations like those in BRICS are reshaping the global financial landscape in response. Let's get started. What is US national debt? Let's break it down. Think of the US national debt as a giant credit card bill. When the government spends more than it earns on things like defense, healthcare, and infrastructure, it has to borrow money to make up the difference. And just like with a credit card, someone has to lend that money. But in this case, lenders aren't just banks, they're investors, foreign governments, and even parts of the US government itself. The debt is split into 2 main categories. First, there's debt held by the public. This includes US Treasury securities, things like bonds that are bought by investors, both domestic and foreign. Second, there's intragovernmental debt. This is money the government owes to its own federal accounts, like the Social Security Trust Fund. Yes, the government is borrowing from itself. And here's the staggering part: the US national debt has surpassed $36 trillion. Like I said, yes, that's more than the combined economies of China, Japan, Germany, the UK, and India. With numbers this big, it's no wonder the debt has become a global concern. But who's lending the US all this money, and why does it matter? Let's dig deeper. Who holds US debt? When the US borrows, it doesn't just call one lender, it has a long list of creditors. So, who actually owns America's $36 trillion debt? First up, domestic creditors. They hold the lion's share of US debt, about 67%. But who are they? Think of it as a mix of familiar faces. The Federal Reserve, for instance, buys US Treasury bonds as part of its monetary policy. Social Security and other government programs hold debt as a way to keep funds growing. And then there are private investors, from banks to individual bondholders. This domestic ownership means most US debt is essentially a promise to Americans themselves, which creates a level of stability. But not all creditors are local. About 24% of US debt is held by foreign countries. Leading the pack are Japan and China, followed by nations like the UK. But here's where it gets interesting. Some of these nations are BRICS members, including China and Russia. China, for example, holds over $800 billion in US debt. While this might seem counterintuitive, it's part of a larger strategy. By holding US Treasury securities, China can stabilize its own currency and ensure strong trade ties with the US. But BRICS nations, particularly China and Russia, also see an opportunity. As they push for de-dollarization, reducing reliance on the US dollar, they can use their debt holdings as leverage. It's a geopolitical balancing act, supporting the US economy in the short term while planning to challenge its dominance in the long run. So, while most of America's debt is held domestically, the foreign slice, especially from BRICS countries, carries significant global implications. And with rising alliances like BRICS reshaping financial systems, the dynamics of US debt ownership are more important than ever. Why does US debt keep growing? The US national debt seems to grow every year, like a snowball rolling downhill. But what's causing it to spiral out of control? The first reason is simple: persistent budget deficits. The US spends more than it earns, and the biggest expenses are defense, healthcare, and social programs. For example, the US defense budget alone is more than the next 10 countries combined. Add to that rising healthcare costs and obligations to programs like Medicare and Social Security, and you get a recipe for constant borrowing. Then there's the impact of recent events. During the pandemic, the government spent trillions on stimulus checks, unemployment benefits, and small business relief. While necessary, this spending pushed debt to record levels. And here's another problem: rising interest rates. As rates climb, the US has to pay more just to service its existing debt, meaning less money for other priorities. But US borrowing isn't just an American issue, it indirectly fuels global markets. When the US borrows, it issues treasury bonds, which are considered one of the safest investments in the world. This flow of money helps stabilize the economies of major trading partners, including BRICS countries. China, for instance, buys US debt to keep its own currency competitive in trade. Meanwhile, Brazil benefits from U.S. economic activity driving demand for its exports. So why does U.S. debt keep growing? It's a mix of high spending, unavoidable crises, and global interdependence. But as the debt balloon expands, the question isn't just how big it will get, it's how long it can keep rolling without causing a global avalanche. Why does U.S. debt matter globally? The U.S. debt isn't just an American problem, it's a global issue. Why? Because it's deeply tied to the one thing that underpins the entire world economy, the U.S. dollar. For decades, the U.S. dollar has been the world's reserve currency. This means global trade, investments, and even central bank reserves depend on the dollar's stability. But here's the catch: this stability is directly linked to the U.S. government's ability to manage its debt. As the U.S. debt grows, so does concern about the country's ability to pay it off. And when confidence in the U.S. economy wavers, the entire global financial system feels the ripple effects. Now enter BRICS, a coalition of emerging powers actively challenging the dollar's dominance. These nations are working on reducing their reliance on the dollar by creating alternative trade systems and currencies. They are conducting more trade in their own currencies and even exploring the creation of a shared digital currency. This move directly undermines the dollar's global role. Here's where U.S. debt comes into play. As debt levels soar and interest payments balloon, BRICS nations see an opportunity. By promoting de-dollarization, they could capitalize on U.S. vulnerabilities to accelerate their rise in global finance. And it's already happening. Global reliance on the dollar has been decreasing, with BRICS leading the charge. If confidence in U.S. debt and the dollar continues to decline, the global impacts could be massive. Shifting investments, weakening trade partnerships, and destabilizing economies worldwide. The U.S. debt doesn't just matter because it's big, it matters because it's the foundation of global economic power. And that foundation is being tested like never before. How does it impact everyday Americans? You might be wondering, how does $36 trillion in U.S. debt affect me? Well, the truth is, that mountain of debt hits closer to home than you think. First, higher interest payments on the national debt mean the government has less money to spend on things that matter to you, like education, healthcare, and infrastructure. Imagine billions of dollars going toward paying off interest instead of fixing roads or funding schools. But it doesn't stop there. Rising U.S. debt also pushes up interest rates on mortgages, car loans, and credit cards. That dream house? It just got a lot more expensive. And that credit card debt? It's now costing you even more every month. And as debt grows, so does the risk of inflation. When prices rise, your paycheck buys less. From groceries to gas, everything feels just a little more out of reach. So while $36 trillion might seem like an abstract number, its impact is anything but insignificant. It's higher bills, less opportunity, and more financial strain for families across the country. Is the debt sustainable? Can the U.S. keep borrowing forever? Or is it walking a dangerous financial tightrope? That's the trillion-dollar question. Right now, the U.S. debt has surpassed 120% of its GDP, meaning you owe more than the value of everything the economy produces in a year. But does that mean a crisis is inevitable? Take Japan, for example. Its debt is more than twice its GDP, yet it hasn't collapsed. Why? Because Japan's debt is mostly held domestically, and it has a strong savings culture to support it. The US, however, is a different story. Nearly a quarter of its debt is held by foreign creditors, including nations like China and BRICS members. And this creates unique challenges. BRICS nations, especially China and Russia, are pushing for de-dollarization, reducing reliance on the US dollar in global trade and finance. If successful, this could weaken the dollar's dominance and make it harder for the US to borrow at low interest rates. In other words, BRICS is playing a long game. By promoting alternatives to the dollar, they're not just challenging US economic power, they're potentially reshaping the way America finances its debt. So, is the US debt sustainable? For now, the economy's size and the dollar's global role provide stability. But as borrowing costs rise and BRICS nations chip away at the dollar's dominance, the balancing act becomes harder to maintain. The question isn't just how much debt the US can carry, it's whether the global financial system will keep supporting it. And that's a game with stakes for everyone, not just America. In conclusion, the US debt isn't just a national issue, it's a global challenge. It's deeply tied to the dollar's dominance and shifting power dynamics with rising coalitions like BRICS. As the debt grows, so do the risks and opportunities for the US, for BRICS nations, and for the global economy as a whole. But what do you think? Will BRICS succeed in leveraging US debt vulnerabilities to reshape the global financial system? Or will the dollar's dominance prevail? We'd love to hear your thoughts in the comments below. If you found this video insightful, don't forget to hit that like button and subscribe to Elite Global Watch for more deep dives into the shifting global economy and more. Stay informed, and we'll see you in the next one.